Welcome to the Forex, and here we're looking at the US dollar. As you know, we were looking for a correction across the 80 area through here, and it's pretty much done that and pushing higher now. And the wave count that we're looking for was essentially the A wave moving up through to here. And 5 waves, looking for a B wave. It didn't really pull back to the 61.8 retracement level or anything like that. And that's kind of a bit common when you're working with like large whole numbers. They tend to become quite sticky. Not always, but that they can do, and they can skew the wave count a bit as well. So we need to accommodate that and be a bit flexible and a bit diligent, as they say. But yes, we understood that this was a 3-wave price action here, so we understood that it was corrective. We just didn't understand if it was going to get any sort of larger. But the push up through to here certainly sort of sent it, a push above this little high here, confirmed it basically, because this could have been a B wave here, and A, B, and C here for a B wave, and then working lower for the C wave. But doesn't seem to be the case, and it looks like we'll be working higher now through here. So looking from wave B and looking up to wave C up here for wave 4, which is all of this will be a corrective rally. And there'll be 5 waves in this structure, and we're looking at this being wave 1 and 2 to here, 5 waves for the 3rd wave here, 4th wave, and then the 5th wave. So look, anywhere we're looking up at subgroup 2 area here to 81 here. So as long as the market stays above 80.20, if the 80.20 becomes the retested resistance, then we've got ourselves a downtrend from that point there. So as long as that stays in play, then it's up from there. And of course, that affects different markets in different ways. And the euro is a bit of a mirror image. And we would be looking at that moving lower towards 136 area, if not lower for its A, B, and C for wave 4. It's quite common too for the A wave to be have some equality with wave C as well. So we could get a bit lower than expected. The 135 in the bigger picture is a very strong level. In fact, the levels go 1, 2, 3, 5 here, then 8 here. So the 136 in here, 136.50 in here is the sort of halfway mark between that. So that's important. And at this stage, the market's below that. If I can just drill in here for a moment, just on the intraday here, from wave B here that we'd have to look at is wave 1 down to here, wave 2 to here, 3, 4, and 5 here for the 3rd, which is not finished yet here either. So look, it'll bounce around a lot in group 1 as normal, 10, 20, and 30. So you can expect all that bounce to be in play there. But the trend is still certainly down. The Australian market, the Australian dollar rather, the wave. Well, look, it's quite simple to one point. So we've got a nice clean 5 waves down here for wave 1, wave 2, beautiful wave 3 down here. Wave 4 is pulled back to the 38.2 retracement level, and also this strong number here to 9272. So 272 and 772 tend to carry more weight than a normal 72. But so look, wave 4s tend to move sideways. Especially after a strong 3rd wave here. It just takes time to emotionally balance this whole move out through here. Now, the wave 4 could be finished here in terms of an A and a B and a C here, and be done and dusted, and then move down for wave 5. We don't expect wave 5 to be, very long, so I was just putting it into group 2 here, 91.72, because wave 1 here and wave 1 over here should be roughly the same because the extension's in wave 3 here. The tricky bit is wave 4. Wave 4 here, like I mentioned, can be finished here, or it could end up over here in terms of a larger, instead of having an A and a B and C here, that can just be the A wave, then the B wave over to here, and then the C wave back up over to here. So the C wave would be 1, 2, 3, 4, 5 over to here, and then down from that point there. So we need to, you know, I don't really sort of have an answer as such just yet, but this is how I would sort of view it. So wave 4 can be completed here, and if that's not the case, then it will just be a larger structure with wave B over here, because this is in 5 waves here. It'd be the A wave, the B wave, and the C wave to here, and this would be the C wave over to here, and this would be the A wave here, and of course the wave 4 would be over yonder here as well, and that would leave this move up here in 5 waves to the upside in terms of 1, 2, 3, 4, and 5 here. So it's either that or we'll just be moving down from here. So I really don't know. So what I could say is basically buy new highs through here if that's going to be the case. Right, the Euro Australian. Once again here, nothing sort of fantastic in terms of trends developing, but from this wave 3 here, we're looking basically down for an A wave, a B wave, and then a C wave down as a larger correction across this 1.5 here. And we've got this little 1, 2, 3, 4, 5 here. So we're looking for a 50, 60% retracement level here. We know that the 150, you know, is a medium level. It can skew the wave count a little bit. So we just need to work with this particular low that we've got in play here. We've only got 3 waves up here so far, and it's hit the 50-60% retracement level of this move down through here. So I know at the 148 and the 50 and the 61.8% retracement level, there's going to be problems there. There is problems there. It could develop into 5 waves moving up here in terms of 1, 2, 3, 4, and 5. And if we do get 5 waves up there, then we know we'll get a correction and then another 5, okay? But currently we only have 3 here, so it could fail from here and we could end up cascading lower from here. So in terms of the internal structure here, we can see that we've got from the low here, we've got wave 1, wave 2, a nice 3rd wave up here, which could be wave C and finishing here. But we're looking at it as wave 4 in terms of this does appear to be corrective to this point. So an A wave, a B wave, and a C wave that can be finished here, or it can pull back down to here. But once it's complete, we'll see further upside here. If you're going to trade sort of long here, well then it's a bit dangerous, but being above 14772 as a retested support, or better still, the 148 as a tested support here will get you up to the 149. The pound yen daily chart here. This, first of all, you know, all of this strong move up through here. Then we've got this move here. This first swing here is corrective. So that means that eventually, once this correction's finished, we'll see new highs above this here. It's that simple. The tricky bit is that, you know, what the hell is this here? And we've, you know, had it in a bit of a guessing game in terms of, you know, a triangle pattern. And in a way, it is a bit of a triangle pattern, because we've got this high here, this low here, then this high, then this low, which is, you know, within that previous high low. And this is the same coming through here as well. So we can see that the 170 is quite an important point through here. We know on the upside, the 172 is important. You know, we've counted sort of 5 waves down through to here. We're looking for a bounce back. In a bit of a nutshell, if the 172 becomes support, we could actually move up from here. So that's what we're sort of looking at here. In terms of moving up, on the 4-hour chart here, you can quite simply see there's just resistance here, which fits into the 172 and also to group 2 here as well. 17172 is resistance. So, you know, it is correcting sideways across here, which is actually quite a market correcting sideways is a sign of strength. So, yeah, look, I just think that, we were looking to trade up to this area to 172, but obviously we would have dumped that on the Friday, and into 170, 171, 172 area. So, look, there's nothing really much to do here. It's just a really matter of allowing this to play out a little bit here. The move up here, as I mentioned, is impulsive to this point here. So an A and a B and a C here, or an A and a B and a C to here. I'm not quite sure, but I would just allow it to unfold. If the 170, 172 becomes the retested support, then sure, have a go at it, and go in for the longer term and see if you can get support on 172 here. I just think we should leave it for the time being. That's all. The euro yen. Just go back to the bigger picture here, just bear with me. Right, so in the bigger picture here, we're looking for an A wave, a B wave, and then a C wave down. And if counted correctly, well, then this would be wave 1. Wave 2 is way over here for wave 2, the 3, the 4, and 5 waves down here for wave 5. And in fact, it's sort of an expanding market moving to the downside, because if that's wave 1, that's fine, that's that range size. Wave 3 is bigger, and then wave 5 is actually bigger still. So in a sense, it's actually expanding to the downside. So we may see this just as a rally here, just because I've got this here. It may not be the case. But in terms of seeing a rally here, we'd be looking at a retest of 140 if that was the case. And would need support on 139 here. That little move up through here does appear to be impulsive, which is this move here. And this move here appears to be corrective here. Okay, so an A and a B and a C here. So a 3-wave price action is corrective in a bullish market. So it's likely that we'll find support on the 139. And if that's the case, then you want tested support. So it's tried to get up here, it's failed. Here it's moved up, here it's moved up and failed, here it's moved up and so the retest is more important than the breakout. So that needs to stabilize on that 139 there. So if you can see that, then you can scale in through 10, 20 and 30 here, but you are buying off the lows here. And what you could expect is something like this here, a wave 1 or a wave 2 or B, and then 3 here, but the same sort of length, sort of here, an A and a B and a C, but retesting that 140 there. Right, don't enter early though. Don't enter below 139. Okay, well that's it. So US dollar is pushing to the upside, so you need to take that on board and see what your pair are doing under that particular pressure. Cheers.